Hi, I'm Lena, and welcome to Super Data JP, the channel where we turn Japan's real estate and cost of living numbers into answers you can actually use. Every video here is built on verified government data, not opinions and not guesses. Whether you're planning to invest, relocate, or just curious what life in Japan really costs, you're in the right place. Let's get into today's numbers.
Fire insurance isn't legally required in Japan. Try closing on a mortgage without it, though, and the loan simply doesn't happen, and the contract you're offered has been getting shorter every few years, for a reason most buyers never ask about until it's already happened to them. First video in a new series on insurance for foreign residents in Japan, fire insurance and the mortgage life insurance requirement. Both routinely get treated as paperwork to sign quickly. Neither one actually is. On paper, fire insurance is optional. Legally mandatory is false. Nothing in Japanese law forces a homeowner to carry it, full stop. In practice, that's irrelevant for most buyers. Virtually every mortgage lender makes fire insurance a condition of the loan, no policy, no financing, regardless of what the law technically requires. The bank's collateral is the building, and they aren't willing to lend against an uninsured asset. Coverage decisions go beyond fire itself, too. Water damage and wind damage riders, covering typhoons and flooding, have become far more central to these policies after a string of major storm years pushed insurers to reprice that risk specifically, not just fire risk. How much that policy actually costs depends almost entirely on one thing: what your building is made of. Japan sorts every property into one of three structural classes. M-class, fire-resistant reinforced concrete apartment buildings. T-class, other fire-resistant or quasi-fire-resistant buildings, e.g. steel frame. H-class, wooden or other non-fire-resistant buildings, and by far the most expensive to insure. The classification comes straight from the building's construction materials, not from anything the owner chooses. 50,000 to 150,000 yen a year, the typical premium range for a wooden, H-class home, depending on location and coverage. That same wooden home can cost 2 to 3 times more to insure than an equivalent steel or concrete building. Same location, same coverage amount, purely a structural penalty baked into the classification. Concretely, a wooden H-class home paying 100,000 yen a year, against a steel frame T-class home of similar size and location paying 40,000 yen, over the current 5-year maximum contract term. The wooden home, 500,000 yen, about $3,086, over 5 years. The steel frame home, 200,000 yen, about $1,235, for the exact same length of coverage. 300,000 yen, about $1,852, separating the two, purely from what the walls are made of. And those premiums aren't fixed for long. Insurers periodically revise their reference rates industry-wide, and the swings can be dramatic depending on exactly where the property sits. In the most recent revision, rates moved anywhere from -13.8% to +36.6% depending on prefecture, structure class, and building age, a nearly 50-point swing across the country. Here's the part that actually reveals something bigger: how long you're even allowed to lock in a rate has been shrinking, and it's happened twice. 36 years used to be the maximum, until 2022. Then 10 years, until it dropped again to just 5 years in 2022. Insurers can no longer price multi-decade natural disaster risk accurately as storms and flooding intensify. Insurers aren't waiting for climate change to show up in the headlines, they're already repricing around it, one contract cycle at a time, long before most homeowners notice the pattern. The practical effect: instead of locking in one rate for decades, homeowners now renew every 5 years, right into whatever the next round of rate increases looks like. Paying multiple years upfront still gets a discount over paying annually. It just no longer buys the multi-decade certainty it once did. None of this is limited to owners, either. If you're renting an apartment in Japan, there's a version of this same policy already waiting in your lease agreement too. Required as a lease condition by nearly every landlord or leasing agent. It isn't a suggestion buried in the fine print, it's typically listed as a condition of signing it all, right alongside the deposit and key money. 15,000 to 30,000 yen, the typical total cost for a standard 2-year rental policy on a studio or 1 LDK. Cheap, by comparison, and usually arranged through the leasing agent directly. The core piece is liability coverage for the landlord, typically 10 million yen to 20 million yen, protecting you financially if you accidentally damage the unit itself, say a kitchen fire or a burst washing machine hose that floods the floor below. Contents coverage rides along with it, usually 1 million yen to 3 million yen for a single occupant, enough for a modest apartment's worth of belongings, not a full household's, and worth checking before assuming everything you own is actually protected. One more policy worth understanding, for owners and renters alike, sits right next to fire insurance on the same form, earthquake insurance. In a country this seismically active, it's worth knowing exactly how it's structured before assuming fire coverage already includes it. It doesn't. Standard fire insurance explicitly excludes earthquake, tsunami, and volcanic eruption damage. A fire caused directly by an earthquake isn't covered unless the earthquake rider was purchased separately in advance. You can't buy it on its own. Standalone earthquake coverage allowed, false. It only exists as an add-on to an existing fire insurance policy. When you do add it, coverage is capped at 30 to 50% of your fire insurance amount. It supplements the base policy rather than replacing it, by design. There's a hard ceiling either way, 50 million yen for the building, 10 million yen for contents, no matter how much your property is actually worth. Reinsured by the government-backed Japan Earthquake Reinsurance Company, so rates and coverage are set by law and identical across every insurer. Shop around all you want, the earthquake portion itself won't change from one insurer to the next. This matters for anyone financing a home purchase who hasn't compared structure classes yet, anyone renting who assumes the landlord's own building coverage protects their personal belongings too, and anyone renewing a policy who hasn't checked how much the reference rate has moved since last time. Practical steps: confirm your building structure class before budgeting for insurance, compare quotes near the end of each contract term rather than auto-renewing, understand what your rental policy actually covers versus what the landlord's building policy does, and treat earthquake coverage as a deliberate add-on decision, not an afterthought at closing. Next in this series, the mortgage life insurance requirement, another policy most buyers sign without fully reading. Fire insurance was never really optional for most homeowners, and its shrinking contract terms are quietly tracking Japan's rising disaster risk in real time, a signal worth reading, whether you're buying or just renewing. Quick recap: H-class wooden homes run 50,000 to 150,000 yen a year, contract terms have shrunk from 36 to 5 years since 2015, rental policies run 15,000 to 30,000 yen per 2 years, and earthquake coverage tops out at 50 million yen for the building, identically, no matter which insurer you choose. That's what fire insurance actually costs in Japan, and what its shrinking contracts are quietly signaling about climate risk. Subscribe for the rest of this series on insurance for foreign residents.
And that's today's breakdown. If you're serious about real estate or moving to Japan, research like this is exactly what separates a smart decision from an expensive mistake. Subscribe so you don't miss the next deep dive, and drop a comment if there's a city or word you want us to cover next. Thanks for watching, and I'll see you in the next one.